Good morning, ladies and gentlemen, and welcome to the second session of Climate Governance Malaysia's Conversation Series 2025. I'm Avicenna from the CGM Secretariat team, and it's my pleasure to welcome you to today's session, Investors' Evolving Expectations for Increased Climate Action. This is the second installment in our CGM Conversation Series. Our first session took place last Friday here at the Securities Commission Malaysia, where we had the privilege of hosting Mr. Tony Goldner, CEO of the Task Force for Nature-Related Financial Disclosures, TNFD, for an in-depth discussion on the TNFD and its relevance for decision makers. If you missed the session, the recording is now available on the CGM YouTube channel, and a blog post summary will also be published soon on our website. We would like to extend our appreciation to the Securities Commission Malaysia, Asia Investor Group on Climate Change, AIGCC, Institute of Corporate Directors Malaysia, ICDM, Institutional Investors Council Malaysia, IICM, and Bursa Malaysia for their support in making this session possible. We invite you to share your initial thoughts before the session by scanning the QR code on the screen. Feel free to leave the form open and submit after the session has ended. Before we begin, just a few housekeeping reminders. This session is being recorded and will be made available on the Climate Governance Malaysia YouTube channel. Please note that any questions you submit will be included in the recording. We also kindly ask that you switch your phones to silent mode to avoid any disruptions. Now, please allow me to introduce our distinguished speaker, Mr. Mark Mills, founder of AIGCC and co-founder of Generation Investment Management alongside Al Gore, the former Vice President of the United States. Mr. Mark Mills joined the founding team of Generation in 2005 and is a member of the client team. Previously, Mark established a sustainable investment business in partnership with Zurich-based Sustainable Asset Management, SAM, and led the operations in Australia. He was also a founding director of CS First Boston Asset Management Australia, and previously worked in software engineering with companies including NEC and Logica. He also serves as chair of Australian Wildlife Conservancy UK. Please join me in welcoming Mark Mills and Dr. Hezri Adnan, Director of Group Sustainability and esteemed council member of CGM, to the stage as we begin the main segment of today's conversation.
Good morning, everyone. Thank you for being with us today. A little bit of Murphy's Law at work kind of introduction, but I think the machine knows that we have generous time given to us, Mark, and they should be all right to have a little bit of challenge in the beginning. Thank you, Avicenna, for the introduction, and Mark, a special thank to you for joining us today, this morning, in this second conversation, second in the conversation series of the Climate Governance Council. As you've heard from the MC just now, Mark has had at least a couple of decades of experience in the investment space when it comes to climate change investing. If you can start by just sharing with us how it started. For most of us, the climate change action started in 2015 because of Paris Agreement, but we know that the whole evolution of environmental policy and climate action has started way back, decades back, and you've been in the space for a long time, and if you can just share with us the journey.
Well, thank you, Hezri, and that's almost, is this working? Almost embarrassing to say it's really 4 decades now. I'm sorry to say that. But before I begin, perhaps I can also thank you, Hezri and Sunita, for organizing this, and also everybody here for your interest, because what we're talking about is something that affects everybody in the world. Every part of society is going to have to change as part of this transition. And although today I'm going to be reflecting on the investment side of that equation. So yes, this journey has been, for me, going back 4 decades. And I should, I think, be transparent with you. I do not have any high formal qualification in economics or finance. Actually, as you'll see from my resume, I'm a software engineer who went kind of wrong in life. I got the opportunity to join an investment bank in the late 1980s. So that's really the starting point for me in the financial world. And at that point, I can tell you that the word environment was never ever used in the financial world at all. And I didn't know that I shouldn't be using that word. So I was asking a lot of questions about that. And I was called, actually, my colleagues started to call me a green pinky or a pink greenie, one or the other. Clearly, I was a tree hugger, but of course, underlying that, must have been a communist as well. So that was my starting point when the word was never used. But because I didn't know better, I investigated this topic more clearly. And I think the starting point for this journey is what people still today call socially responsible ethical investment. And that was starting to be seen more of. And I looked at that very closely, and there was a big problem with it. Ultimately, the ethical investment world is about doing or investing something along our own ethical lines, which is perfectly valid for an individual. But if you're thinking about changing the world, it's really not sufficient, because it can be shown if you start doing things for ethical reasons only, that you actually can't deliver the best returns. And as I say, that's fine for individuals, but it's not fine for people with fiduciary duty. So we must now address fiduciary duty, because all of the major pots of money in the world are managed by people who must think about how to get the best returns. So with that as a starting point, I thought about then, well, how could we develop an investment approach that really addressed getting more returns? And my starting point was to think about environmental performance. Can we measure environmental performance amongst all the different corporations and put them into their industry categories, and then say, which are the better environmental performance? And could we invest in those better environmental performers? And my theory was that actually, if we could do that, we might find a linkage between environmental performance and long-term financial return. And that's when I started my own business that we talked about here. So I think that's kind of a starting point for this more broader, and I wasn't the only one thinking about this, because I learned almost as soon as I set up my own business, there was the launch of the Dow Jones Sustainability Index. I don't know, some people heard of the Dow Jones Sustainability?
Very familiar.
That was in 1999. And this is the early days of the internet, and I'm so excited to see this. I couldn't believe this was happening. I just set my own business and someone's launching this index. It's incredible. And the more I learned about what they were doing, I was so impressed, because this is where I first heard ESG. They said, no, we're not only doing environmental, we're doing social and governance as well. And putting all that together, started to talk about sustainability. So that's back in 99 now, and we're now in the stage of the world where we're able to assess these kind of criteria. And that would be affecting many now directors of corporations, because the interesting thing about this index is that it gave a commercial incentive for corporations to get involved, because there was now a competition to be a member of an index. And so the better performers would say, help you, I'll start reporting, show you how good I am, and every year we do an assessment every year. And that became grow and grew, and I think really then start of the index style of sustainable investing, if you like. That's probably the first early development. And then the link with generation is kind of, for me, a second phase of that journey. And again, perhaps anyone here who is in business may understand this, but I think to be successful in business, you always need a good piece of luck every now and then. So I had my good piece of luck in 2003. Back then, the word sustainable investing wasn't known still, but there was an organizer of a conference in Australia who was all about sustainability and said, Mark, come along and talk to us. Tell us what sustainable investing means. So I said, I'd be happy to go. And I was happy because I didn't have to pay to go to the conference. That's always a good thing when you're making a small business. But the keynote speaker at this conference was a guy called Al Gore. And he made a very nice speech. He had 500 people, standing ovation. And I had to talk about sustainable investing. I think I had 30 people, certainly no standing ovation for sure. But my piece of luck was that the speakers could then get together at night and talk to each other. And Al Gore said to me, "What do you do?" I said, "Sustainable investing." He said, "What's that?" And he literally grilled me for an hour and a half about sustainable and what is this all about? And because you can imagine he's very passionate about this topic. And there are many politicians in the world, ex-politicians around the world, when they finish politics, I don't know why this is, but investment companies say, "Please come and be an advisor." And that was with Al Gore. He was an advisor to investment company. And he told me, "But this company has no soul. It's just no soul." And he became very interested in this topic of sustainable investing. And to cut a long story short, he met this guy called David Blood, who was running Goldman Sachs Asset Management. And the two of them really hit it off and wanted to create a sustainable investment firm only. And my piece of good luck was they invited me to come along and come to London with my family and help set up this new way of doing things. Now, I don't know how this goes down in terms of the English here, but a lot of people then refer to our company as Blood and Gore. I mean, it used to be a little bit of a joke, but it's kind of a bit of a weird way to call a company, but Blood and Gore was the sort of people talked about us. Well, we had to come up with our own name, and we called it Generation, actually. And now, so what is this next stage of sustainable investing? Well, for us, it's now not just doing the ranking system. It's actually building in the sustainability analysis with very traditional investment. So because there are some very good things about the traditional investment, we don't want to let those go. And probably everybody here has heard of Warren Buffett. He's probably the most famous, and we would not argue with anything that Warren Buffett says, except maybe one thing or two, because he's really talking a lot of sense about investing. What we wanted to do was take all of those sensible things and integrate in sustainability, really using sustainability as a factor of measuring the quality of a business. And at that point, we are now doing what we call in the investment world active management. So we are wanting to get the best returns we can get for our clients by bringing all these things together. And in the investment world, you always compare your returns with some kind of index. So it's possible to simply invest in an index very cheaply, but when you start now doing this kind of management, you need to show better returns. So we started that 20 years ago, and actually this year is our 20-year track record. So that's kind of a milestone for us this year. And so I can just share with you just some results from that, because ultimately, if we're going to have any hope to attract investment into these areas that we need to do to change the world, we have to show the returns. And so while it's wonderful to have Al Gore making these great speeches, ultimately we all know the credibility comes from our investment returns. So we started this journey and said, okay, well, we're going to invest in shares from all around the world. We're going to choose 40 to 50 of the best ones. You all know there's thousands of shares we can choose, but we're going to choose 40 to 50, building in the sustainability thinking and our traditional investment thinking. And we want to try to deliver 3 to 4% every year, more than you would get in a benchmark. And that would be quite an achievement if we could do it. And I am pleased to share with you today, and probably the only reason I am here talking to you is that we could do it. We actually can now show that over 20 years, our results show 3 to 4% more than an average over that time. And that's actually a good result. I don't say it to be boastful, I just say it because we have to bring this kind of understanding of financial return being an important part of sustainable investing, because we're going to have to attract more and more capital into these areas to transform society. And coming back to fiduciary investors, I can tell you that even if the world was on fire, the fiduciary investor would not invest in fire hoses unless we could show them how to make best returns they can make. So that's a very important topic.
Thank you. Thank you. From just listening to your journey, I mean, we can tell that one ingredient key in this endeavor is purpose, right? And you have to have serendipity has got to be in there somewhat. Luck is very important, and return, right? I mean, the traditional investment criteria must be there.
Yeah.
Right. But just curious, so that was about 2000, late 90s and around early 2000s. At the same time, we had this gathering by Kofi Annan, the International Secretary General, calling through the United Nations Global Compact. 19 financial institutions will call in, and they released this Who Cares Win report, which has got this ESG. So that's pretty much separate from all this sort of international or UN-led discussion.
Pretty well. This was all sort of from a bottoms-up
Right.
individuals, really.
Mm.
And I think what's interesting when I think of the founding members of our team, because I'm one of 7 people, the connections that we had made between us around the world were quite interesting that they were there.
Right.
Because I guess because there weren't many people doing it. But we just did it out of a belief and a philosophy.
Yeah. And you can share with us, who are these 7 samurais, if you like? Who are they?
Well, obviously there was Blood and Gore.
Blood and Gore. Yeah.
And then I mentioned this group in Switzerland that I started to work with before Generation. We had a partner, Colin Leduc, from there. And then David Blood brought some people with him from Goldman Sachs, one of our CIOs. So there were, and then Gal Gore brought one of his close colleagues that used to work with him in the White House. So we had this group that came together at that time.
And this was before the Inconvenient Truth was released?
Yes, this was in 2004, the official start, and then 2007 was the Inconvenient Truth.
Right, okay.
And that was a very, very exciting year, actually, because my role at Generation has been to try to deliver the message. When we started, of course, we have no clients, and it's generally not a good business if you don't have clients. So they said, Mark, you need to go and help get some clients. So that was my role, and Al Gore helped me a lot because he made this movie. The ability to show the movie 4 times before it went onto the screen. And so I said, well, I want to take it to Sweden. I was doing a lot of business in Sweden, and it was amazing. We showed this in Sweden, and the King and Queen of Sweden came along to see it. So, so in terms of helping us build the message, it was a wonderful gift.
What an amazing journey. And I also wanted to know a bit about who are the other members of the Generation group, because is there any Asian in there? What led to the Asia Investment Group on climate change?
Okay, well, sadly, no. I was lamenting to Sunita before about the fact that we were this group of white middle-aged males, which is not a good look. So but we had to make sure that we diversify, which we have done well. Just one other person in the team who I personally found be particularly interesting, and this is just reflecting my bad background, really. One of our partners is a guy called Mark Ferguson. The name you may not know, but if I told you his father, you may know, depending on, your sporting interests, but his father is Sir Alex Ferguson. And so for me, in fact, this is how I brought my family to London. I said to my son, who was a football nut, I said, if you come to London, we're going to be able to get these tickets. And he had these visions of playing for Manchester United, but of course didn't happen, but we did get to see a lot of really good football.
And that is very well connected in the right way. So, and how was the Asia
Yeah, so that came about around about 2015, so much later, yes. So, and the reason it came about is that in order for us to make the sort of change we have to change, as I mentioned earlier, we're all going to have to work together. Working together had occurred in the investment community in Europe. We had an investor group on climate change. We had one in Australia, New Zealand, and we had a group in North America. And one of my clients was head of the Australian group. And he was in London. We had this nice lunch. And occasionally the 3 regional groups came together, and he was the chairman of that group when they came together globally. And he said, this is crazy. We're here sitting, talking about the world, emissions, and there's no group from Asia. This is just a ridiculous situation. So we said, okay, well, we need to make one. So we then just started to build the infrastructure to do that, which started with Australia, and yes, now it's almost 10 years we've been doing it, but we've reached a very interesting part now because it actually has gone very well. We've been so delighted with the response in Asia We now have close to 70 members representing $28 trillion. And in a time with the world, we're seeing, which is, I think, very sad, the drawback from our biggest country in the world. It feels to me Asia is really stepping up to fill these gaps. And that's going to be really important, because I've believed all along that the world can say what it likes, but if Asia's not involved, we're not going to achieve what we need to achieve. So that's, yes, now 10 years. And the Asia group now is bigger than the mothership. So the mothership was the Australian group, and now the Asia group is much bigger.
Well, coming from a stock exchange, we have Bursa Malaysia. And of course, we're looking at some statistics from London Stock Exchange. They had this report called Investing in Green Economy, with 13,000 publicly listed companies from all over the world as their sort of data set. And we're looking at this, the green economy corporations or public listed companies as the second largest, just behind the technology group, right? And the CAGR in the past 10 years was more than 10%. So it's really growing very fast. But your asset under management is about 30 trillion.
In my generation?
Yeah, the Asia investment.
Oh, sorry. The Asia Investor Group on Climate Change is, as I mentioned, 70 members who are a mixture of asset managers and asset owners, and those organizations represent $28 trillion.
Right.
So that's quite substantial.
Very substantial, yeah. And so Asia, because of this, challenges when it comes to adapting to climate change, is a natural place. And I think there's some reports on net zero transition that's really pointing to Asia as the active space for climate action. And I'm sure if you can share a bit about, your observations in this region, how it's coming up in the last few years.
Well, I think firstly to say that just through the Asia Investor Group on Climate Change, to see the level of sophistication and commitment from some of these organizations is really very substantial. So just for an example, the Government Investment Corporation in Singapore, who we work very closely with, we find them to be very forward in their understanding of sustainability and the need to invest in the transition. So we have made some very interesting investments together, and we can talk about some of those as well, such as green steel, which, for example, very happy to. I think it's a very interesting case study, actually, of maybe the next evolution of where the sustainable investment journey is heading. I would put that under the broader category of impact. I think we're hearing a lot more about the word impact, which we should probably include.
Yeah, that's right.
And then if we continue the green steel, we can talk about how we see that in terms of Asia as well, because to be frank with you, it's wonderful. Our green steel plant is in Sweden, which is great, but actually we need to have green steel plants in Asia. So we need to do that. So we need to be thinking about how we're going to roll that out, and we are actually thinking about that already, which I can share more detail on.
Thank you. I'm sure there'll be questions along that way in the next couple of minutes. But just to understand a bit more about the recent report that was released by the the Asian AIGCC. If you can just highlight a few key takeaways from that, just high level.
So the report that Hezri is talking about comes from the Asia Investor Group on Climate Change. It's an annual report, which is helpful because we can then see trends, if you like. So it's actually the 6th report. It's there on the website of the Asia Investor Group on Climate Change. And it's really covering the progress of the Asia investment community along a lot of different metrics to do with climate action. So it covers the governance structures, how do the boards look, is the board oversight, the level of board oversight for climate, the remuneration practices that are there to support that direction. Engagement is another one. And this is a very important topic as to why we need to come together. And maybe I can just share with you how Generation thought about this right in the beginning, because we felt very strongly that we could get better investment returns, but we built a mission for the company, which was to build the business case for sustainable investing. In other words, we don't want to be the only one doing this. And this is very important from an engagement viewpoint. So perhaps some of you have heard of the Principles of Responsible Investment. That is another charter organization. Generation was one of the foundings. We helped to create that because we didn't want to be the only one doing this. And that's actually an interesting journey as well, because from 2008, 7 or 8 when it created, today there are more than 3,000 signatories, and that represents 120 trillion. So that's about four times the number we talked about with Asia. So that's a very good progress, I think, in terms of the adoption of sustainable thinking around the world. And then coming back then to this topic of engagement, this is the topic of the investors talking to the companies in which we invest, which we've always done as an investor, which we believe you should do, have constructive dialogue. But now this engagement topic is becoming much more strong in terms of the net zero, for example. And so in an engagement world, of course, we've been talking about it for a long time, but it's not very useful if only we are talking about it. We need all of the investors to be talking about it. And it's how we felt about our investments right at the beginning, because the message, we have a very key message we want to give to the corporates that we invest in, which goes like this: take a long-term view of your business and manage well your environmental, social, and governance issues, and do that because we as your shareholder believe we will get a better long-term return. And in a way, that was a shift in a paradigm, because we had seen too much of a different message. The other message was, get those short-term returns as quickly as possible. That's a really bad message. And we feel that if that's the dominant message that your shareholder is giving a corporate, it leads to very bad results. I would point to the Volkswagen case. Whoever decided that they should cheat the world rather than trying to get on board, I don't know what they were thinking. They might have thought they were boosting long-term, short-term returns, but they just destroyed long-term shareholder value. So we wanted to have that message coming not just from us, but from the rest of the community. So when we see the growth of PRI, we can see there are more and more investors around the table sending that message to the corporations. So coming back to a report, then engagement then becomes a very important topic. And we measure that, the role that the Asian investors are playing in engagement. Also, how are you investing? Are you actually investing in the transition? So all of these different metrics are covered amongst the 230 organizations in the report that are surveyed. And now that this is a 6th report, I think you can just see very clearly that this trend is only going one way. And having been involved now in 40 years, I would say that this is the whole direction. Of all those years, it's only gone one way. Now, that's not to say that it's linear and a nice straight line. It's not, because there are always setbacks. So it goes more like this, boom, boom, boom. It's the direction very clear, but there are always setbacks. And of course, we talked earlier, we are in the middle of another huge setback.
Yeah. It's time. Why don't you we reflect on this a little bit? One prominent figure in the sustainability movement has coined this term that we are now in the phase of sustainability recession because of what's happening in North America, and it's just sort of trickling all over. If you can comment on that, this.
Yeah. Well, this is part of that longer journey where we've seen these little dips. So I can't tell you we're not having another dip. I wouldn't go as strongly as to say it's a recession, but it's certainly an unhelpful dip. We will come back from it, but the very tragic thing is we actually don't have the luxury of time, so the timing is very bad. But if we put it in context, even in the dips we've seen in the last, say, the 3 biggest dips recently, there was a dip with the global financial crisis for sure. So at the global financial crisis, what we saw in terms of a dip was governments pulling back from some of the commitments they made, some of the subsidies they were giving to the clean tech area disappeared, and there was blood on the floor with all sorts of investments. But we recovered from that dip. And what we saw also with the second dip, in fact, when I say recovery, our own investment returns recovered very strongly from that dip. So we could see the recovery. The second dip, of course, was Trump won. That was a dip. But the recovery was even stronger because we saw the introduction of the IRA. The Inflation Reduction Act was probably the most significant piece of legislation to advance the climate crisis agenda that we've seen in history. And so now we're in the third dip, and we're talking about an ESG backlash. I think we will see a Trump backlash which looks much bigger than the ESG backlash. We're seeing signs of it already. In fact, even in my country, I'm from Australia, we've just had an election there which is absolutely an extraordinary result. I think a very positive one from a climate perspective, where the wannabe party who said, I want to try and look like Trump, got actually decimated. We have never seen before in our country the leader of an opposition party lose their actual seat, that he was totally trashed. So I think, and we saw in Canada a similar result. So, and in the US itself, there have been some elections which Musk has been throwing hundreds of $millions at smaller scale, which he's significantly failed at. We have midterm elections not too far away. So I feel that this Trump backlash is going to be very, very significant. But it's not helpful for sure, but we have to work through it. And what we're seeing on the ground is not really so much a retreat. In fact, we actually put out a report on the Generation website. You can see it 2 days ago. We do these insights pieces, and it really was trying to pull out what is actually happening on the ground. Because the media loves to talk about the backlash, and all of these things. But when you actually do the data-driven evidence, we can see that actually it's not so much a recession. We would call it green hush. In other words, a lot of these companies will continue to do it because they know, as we all know, the science isn't changing. Nothing's changing. All it's doing is they're just putting their heads under the parapet a bit. And I have what I think is a fairly amusing example from a colleague of mine in another company that has an office in the States, and he was suffering, to be frank with you, suffering at the moment. And he's in the area of nature investing. And a lot of the words being used by companies that want to do the right things have been biodiversity. Now, because of this backlash that we've seen in the US against diversity, right? So algorithms are out there searching for the word diversity and picking up biodiversity, not really understanding the difference. Of course, the Trump administration probably doesn't know the difference either. But what's the result? Well, the corporates are not retreating from their actions, but what they're doing is they're changing biodiversity to nature. So, they're just taking these different ways of trying to just keep away from all of the noise and the nonsense and get on with life. And we'll probably have to do that until it becomes totally clear that this is going to change.
Great to know that it is entrenched somehow in the capitalism as we know it already. So one man cannot undo it entirely.
No, that's really the thing. It cannot be undone. It can be delayed for sure.
Yeah. And what's happening in Australia with the recent election is very encouraging.
Well, from a climate perspective, yes, it was very encouraging.
Yeah. So even the political world is made of many parts. It's not just one whole machine without parts, right? So we've covered sort of enough in terms of the background of your journey and what the generation has done and has been pushing over the past few decades, and the Asia Investor Group on Climate Change is also sort of spearheading many of these initiatives, and you managed to get us an alliance going, which is great. I think it's good time now to perhaps hear from the audience. What are the things bugging you? Of course, we've sort of touched on the hard part as well. It's not a recession, isn't it? It's not a recession.
No, well, I don't think so.
Yeah. It's just a bit of backpedaling. Yeah. Any questions, comments from the audience? Please, sir, if you can introduce yourself.
Thank you, Mark. My name is Anthony Cherian, and so my question is actually related to sustainable investing. And one of the common feedback that investment professionals give is that their stakeholders or their clients are always looking at the short term rather than the long term. So my question to you would be like, have you succeeded in or managed to change the evaluation period for which your clients measure your performance beyond, let's say, a typical 3-year period? And secondly is, have you or do you actually incorporate other kind of key indicators or measures in your periodic reporting to the client that look at things in a broader perspective rather than the usual standard return or risk metrics?
Well, they're both very good questions. And so if I reflect back on our beginnings, that first question you raised was really important, that we had to educate the clients to give us, we call it the luxury of time. And whenever we bring our clients together, every couple of years, we have a big global client conference, and we always remember to make sure we thank our clients for giving us that luxury of time. Now, in the public equity markets in particular, if you can buy and sell a share today or tomorrow, that time horizon is even shorter. And the very first investment strategy we created was a public equity investment strategy. So to try to help convey that message, we did some things which are generally not seen in the public equity market. So for the first thing we did was say, well, if you would like to join us, please do. But we're going to lock up your money for a year. That's not usually done, because why are you going to lock our money up? Because you can buy and sell these shares tomorrow if I want to pull it out. Yes, we can do that, but if you're going to join us, we want you to understand that you need to really stay with us for a while. The second thing was, I said, okay, after 3 years, you can leave within a 3-year period, but if you do, we're going to give you a penalty. But why are you going to give us a penalty? Because why you do that? So we had all of these conditions, which from a marketing perspective looked like I was shooting myself in the foot. Why are you doing all that? You're making it. But we did it because we wanted to give that message. And we did, even in its public equities, we included the development of a long-term performance fee as well, which is not done in equities normally, in public equities. To your second question, then, this is, I think, also a very interesting one, because we always the only thing we do is sustainable investing. That's all we do. And we would like to think that if we're doing sustainable investing, we're probably going to be doing some kind of good in the world. But can we show that? Can we really demonstrate that? Well, in the public equity markets, if you're investing in a Microsoft or something, to actually distill what we could call impact is, I've not seen it done, and we didn't really know how to do it. But in 2008, we started managing private equity. So we're smaller businesses that are really developing the new services and technologies that will help us lead to a more sustainable world. And at that point, we said, okay, well, because these are small businesses, we can probably measure that. And so we started doing, from that point, an impact report. We never said to our clients, we're doing impact investing. We always called it sustainable investing. But we could show that there was an impact that we could measure. And it was just kind of for interest's sake, really, at that point. But what's been interesting is how this whole topic has developed since we started doing it, and how influential it has been for our own thinking. So I'd now like to go back 5 years, because that was when we did a very major review of everything that we've done at Generation. And as we went through that review, there were a lot of good things. The performance was good. We had clients from around the world. We have a great team. I mentioned our mission to build a business case. Well, the PRI was going very well and growing. We could see sustainable investing becoming more mainstream. But there was one very big cross on the thing that wasn't going well. And that was the world was in a worse place than when we started, from both a viewpoint of the climate crisis and our commitments to deal with that, from the viewpoint of nature, things were still deteriorating rapidly. So when we asked ourselves what more could we do, it actually came back to this impact report that we were developing, that we have been doing every year. And we could share it with clients and we could see, yep, we're doing good thing, but the level of impact was like this. And as we thought about getting to net zero, you know there are commitments to get to net zero by 2050. We have a commitment to get there by 2040. And we said, well, if we're only going to deliver this level of impact, we're never going to get to where we need to be. And we had to think about how do we get 10 times that impact. So that drove us then to think about creating new kinds of investments and to build in much more ambitious impacts into the way we do things. And that led to the creation of a new subsidiary at Generation called Just Climate. And the Just Climate team, we came up with a very big impact target. We said, for these investments, we need you to make reduction of 240 million tons of CO2 for $1 billion of capital. And it turns out that that number is about 10 times what we're doing already. And it's an interesting thing to think, well, why didn't we do that anyway? But it comes back to what are you trying to achieve? We were trying to achieve financial returns and do it in a sustainable way, which we were doing, but we were having incremental impact. Our conclusion was that sustainable investing as we were practicing it was absolutely necessary, but no longer sufficient in the context of us getting to net zero. So we switched the order around. We said, okay, for Just Climate, let's start with getting this very big ambition, but we still have to get the financial return, so let's now look at how we're going to get the financial return. And that is why, when I mentioned green steel before, that's what's driving us to now go to where the emissions are coming from. We can only get 240 million tons of CO2 reduction if we go to where those emissions are coming from. And some people call these the hard to do things, the hard to abate sectors, right? And we would agree, it is hard. And that's why people don't do it. That's why we weren't, we have to look at ourselves. We weren't doing it because we were driven by the financial return, doing it sustainably, and you can do that. But you don't have to go to the hard-to-do sectors. Now, the way we've changed the order, we have to go to the hard-to-do sectors and work out how to do it a financial return. So that's, sorry, a long answer to your question, but it's turned out to be, by reporting all those broader things, it's actually led to some very important developments.
Interesting how we have tweaked it and this
Just Climate.
Just Climate. I think we have to watch this space.
You know, one of the hardest things is that we were sitting around the table developing the concept. It took us weeks to work out, what are we going to call this thing? We had all these different names for it. And then Al Gore just popped up and said, I like Just Climate. What? And you know, the beauty of that word is the double entendre, because of course with Just Climate, it's very focused on climate. But the word just is a very nice word to encompass the just transition, because if we do not do this in a way that is just, we actually won't achieve it. And we've seen examples of this globally where, for example, Macron is faced with a Gilets jaunes revolution because he thought he would try to do something, but he didn't remember to include how he's going to factor in the response of a lot of poor people who would be affected by that result. So we have to build this in.
That must be the journalist in Al Gore that managed to coin that word.
Yeah, there's something about that guy.
Yes. Well, a couple of hands. Yep, at the back, madam. If you can introduce yourself. I know who you are, but yeah.
Yes. Morning, Dr. Hezri. Good to see you again. And morning, Mark. Shahida from EPF. I have a question for both of you, actually, and I'll start with, I think, the easier one with Mark. As a global investor, there are shifts, tectonic shifts in what we're seeing, what we think we're seeing in Europe. As a reaction to what Trump has been saying, that Europe needs to fund its own defense and not rely on the US or NATO, do you think that, from your lens, do you think that green funds are going to flow away from actual green projects and work its way towards defense funding? Or will the pie grow where sovereigns will actually increase its debt to fund defense spend? And presumably Chatham House is applied.
Chatham House.
For Dr. Hezri, the more sexy question, often with sustainability, everyone talks about greenium, should we be looking at things from a different lens, that there is actual penalty imposed on the polluters, the sinners, the sin stocks, right? That from an emission perspective or from a biodiversity perspective, which will neutralize the position for those who are greener, instead of the pressure on the green stocks proving that they are indeed green. From Bursa's lens, is this something that you're thinking about? I know it's unconventional, but perhaps that's where we should work our way towards.
Next question. One of the great things about being a moderator is that you have this immunity from question. No, just to turn the lens back to you. EPF is our pension fund. So, Shafqat, please.
Yeah. So, sorry, your first question, then, Shahida, then was really about the impact on the defense spending in Europe. Would you think that's going to draw away from the green? Yeah, that's a good question. I suspect, you know, if you think about this as a finite amount of capital to be deployed, then we would have to say that it will have an impact. But on the other hand, I feel that when I talked about the Trump backlash, that in the same way as we've seen with Canada and Australia, that Europeans will be galvanized more to do more. And they have been quite forward, and that, even that green steel investment plant, green steel plant that I mentioned that we've invested in, will be benefiting from the way the government is thinking about, actually now sort of segueing into your second question, because the government there, the union, is introducing the carbon border adjustment mechanism, so that steel flowing into the country that is not green will then have to be paying for the carbon that's embedded. And that just adds to what is already a very commercially attractive, we think a commercially attractive proposition for the green steel. But I'll let you, I'm happy to talk about why that's all commercial, but I think you have, even though you're moderator, you have to answer a question.
I've just lost my immunity then. I mean, from a Bursa's perspective, it's really, I mean, you know, we have to work on the infrastructure for trust so that capital can flow. And that's why the focus has been on data, it's been on disclosure for it's just the first cut, and to raise the floor so that everybody is on the same, you know, floor and ready to enable capital to flow. I think there will be a few more steps ahead, like what you've just suggested, something that we are thinking, but nothing concrete as yet. You know, we think about green equity and all that, and how should we, you know, create a mechanism for that. It will be a couple of years down the road before we can come to a stance on that. But really, with the National Sustainable Reporting Framework and all that, it's really to get everybody to get on the same baseline, if you like, so that infrastructure for trust is established. Then we can work on the higher challenges. But yeah, not really answering, but yeah. Thank you.
I think if I could add to that, because in a way, I think when we set up Generation, we were a little bit idealistic. Like we thought, you know, we talked before that we're just a group of individuals and we're building a business. And we were a big believer in free market economics. But it's become patently clear to us that we cannot achieve these goals without government having sensible policies and at the moment, they're just not sensible. You know, the idea that we still have subsidies for fossil fuels, that's ridiculous, right? We need to stop that today, and then you can do something more sensible with that money. And it's been really part of our investment process right from the beginning that we do not like investments which have what economists call negative externalities. So in other words, there are businesses that take advantage of the rules and they inflict a cost on society and they never pay for it. It's not just fossil fuels, it's obviously tobacco companies. And it's a very interesting thing from an investment perspective, because earlier I said, well, you know, a lot of ethical investors, they don't do tobacco, they don't do that. They do that for ethical reasons. That's fine, but what we have to say is, well, we can't do those. We cannot exchange values for value. We have to deliver the best returns. But we have a very important investment reason why we don't invest in companies with these big negative externalities. Comes back to being long-term investors and the fact that these companies have a risk. If you're investing in tobacco, you are facing a risk from political pushback, from government regulation, who at some point going to wake up and say, you cannot continue to destroy my society like this. We are going to do it. It'll happen at some point. We don't know when that will happen, but it's just not a risk that we want to take. So we're building that into our investment philosophy, and we took the same view with fossil fuels. We've not invested in a fossil fuel company since 2009. Prior to that, we had thought that some of these fossil fuel companies might actually be on board with change, and we had a very lucky escape from BP. We in those days when the company was being run from London as it is, there was a very big push. BP became Beyond Petroleum, lots of nice pictures of flowers and things, and we got sucked into all of that, and we thought they were serious, and so we made an investment back then, and then we started to realize that something wasn't right, and that in the US there were things like the Texas oil refinery incident, there was spillage in Prudhoe Bay. So we did all our work again and said, you know what, even though London's saying all these good things, the US culture is totally different, because actually this is a completely bought out new, and it's not changing. And we no longer had faith that London could change that culture. So we withdrew our investment after we made that decision. I say we got lucky because Deepwater Horizon occurred probably a year later, and that would have been total disaster for us. But this is the importance of doing your sustainability research and being prepared to say that we got something wrong, which we did, but we corrected it in time. And then, of course, once we had that experience, we just don't have any faith that the fossil fuel companies are going to change. So others will say we're staying with them, and it's good that others will try to keep engaging with them, but we're taking a different path because there are enough good investments we can make where we don't have to do that.
Thanks, Mark. Do I recognize another hand? Gary, please. I'm also looking at this side of the room, some prominent bankers. Any questions you want to ask after Gary?
Thanks, Dr. Hezri, and thanks, Mark, for very engaging history of the growth of investment, particularly in this part of the world. I'm interested to know, since you've mentioned green steel and the just transition, how you see the region potentially benefiting from investments in better forms of energy, particularly with respect to what the alternatives are for fossil fuels. So we've looked at Spain and Portugal, and we see that we simply can't go on planting up solar because it's too intermittent. But at the same time, what's the current appetite for interest in things like sustainable aviation fuel, for example, something better than biodiesel, perhaps hydrotreated vegetable oil. In this part of the world, of course, we are already producers of many of the feedstocks, but they end up just being shipped, for example, in the case of used cooking oil, just being shipped either to Singapore, to Neste, or straight away to the Netherlands, where this much greener fuel is being used over there and then sold back to us. So just like your view perhaps on is there a pipeline, as it were, for the next thing after green steel? Is it going to be green concrete? Is it going to be green fuel? Is it going to be sustainable aviation fuel? I mean, we've just seen post-COVID this huge resurgence in air travel and lots of freight actually flying around looking for sustainable aviation fuel. Is this something that you see as a growth area in investments? Thank you.
It's certainly a very important focus area. So when I said the hard to abate sectors, you've hit the nail on the head. That's really one of them. And so what we are doing at Just Climate is we have these roadmaps, research roadmaps that we're doing. And we've done a number on sustainable aviation fuel. And we are really wanting to find the solution there. So we're working on it, but we have not made an investment yet. But if we can find one, we will definitely do it. Concrete was another interesting example you used then, and it's again, interestingly, concrete is harder than steel for reasons you might know to do with chemistry and calcium carbonate. But we have been continuing that work, and we finally found a company called Terra Concrete in the USA, which It's not going to get us to zero, but it's going to go a long way down the curve, and we think it's worth starting there. So, you know, nothing's going to be perfect in this world, but we think we can make some very big reductions if we can ramp up that terra business in the concrete area. So we've made that investment now. And these other areas, we're still looking, but there's a lot of different pathways, and we've got to try to make sure when we make an investment, we don't like taking technology risk. That's not what we do. I mean, there are others who would do that. That's the venture capital industry. Our capital is coming in to expand and grow things we know can work. And that was the whole proposition of Just Climate. Mm-hmm.
Thanks, Mark. Any hands from the left side of the room? Going one, going twice? All right, then. Madam, please. If you can introduce yourself.
Hi, I'm Carol. I'm from a company called Fortitude. I'm wondering what you're doing on addressing nature risk in your investments.
Gosh, what a great question. Thank you. So, I haven't even mentioned this, but when we set up Just Climate, we saw there were two key things that we needed to do. One is to stop emissions, and the other is to draw down emissions. And so we felt nature would be a very, very important part of this topic, because we felt we needed to totally transform the agricultural system. Agriculture today accounts for about 25% of emissions. So it's not only emissions from all of the way we're using fossil fuels in the process, but of course when you're applying fertilizers and pesticides, you're using fossil fuels to make those. And by the way, you're damaging the soils and you're damaging biodiversity. So nature from the beginning has been built into the Just Climate thesis. The only thing is that as we learned more, we realized it was quite separate from the industrials. So we had a few people focus on nature. We did a couple of years' work, and we met a team in Brazil who'd been doing a lot of work on nature. We got to know them, and they've joined us now. And so within Just Climate, we have what I've talked about is industrial climate and natural climate solutions. And that's now advanced very well. We have started raising the capital for that. We did what we call a first close. That means investors commit to be with us for $200 million of commitments into that fund, and we're going to continue to raise up to $750 million. And we're investing to transform the agricultural system. We have to stop deforestation today. We have to restore degraded ecosystems. And our capital will be used to do those things again in a commercially financial way. So having started that fund, we have made 2 investments already. One of them is in the area of crop protection. So coming back to this topic of pesticides, insecticides, herbicides, all those bad things which are damaging soils and diversity. There is now a new way to tackle that, which is called RNAi. So RNA, which became famous during COVID for vaccines, that technology has advanced quite significantly. And the I in RNAi is for interference, and the ability of this company called Greenlight Bioscience has developed this to the extent that a single organism, based on its genetics, can be targeted and the DNA can be disrupted. So you can apply the liquids very freely because they're harmless to everything except to the target species. So those are kind of things that we're looking to help in the transformation of the agricultural system. It's again growth, we call it growth equity. We're scaling up businesses. There are a number of other aspects to nature which are to do with owning land, and a lot of people are doing that. We're not doing that. We're just going to be investing in those things that help the transformation.
That's really pushing boundary, and this was very much needed action in that space.
We think it's going to be a very, very important area for us now to be covering.
Thank you. While waiting for another hand somewhere, is there another question? Yes, please. Lady in the middle of the room. I would like to get your comment sometime later on the role of institutional investors to raise ambition climate change. But please.
Hi, I'm Marissa. Just want to ask, cause coming onto the question about nature risk, right? How much do you guys factor about human rights? Cause when it comes to investing, right, for like climate and say nature investing, a lot of it is like a lot of land. So sometimes they do displace like the indigenous people communities are being like exploited or threatened. So how do you go about in your investing? Thank you.
No, no, that fits very, very firmly under the area of the just transition. So, for example, for the green steel plant is built up in the north of Sweden with the Sami people. So there's been a lot of engagement with the Sami people to make sure that their rights are protected and looked after. And any investment that we make will have to make sure that we're dealing with this question. Even in the public equity space, it's something we've been dealing with. Of course, we have issues in China with that, and so with the sourcing of products, we have to be very carefully looking at supply chains to understand that we're not in cahoots, in a way, in supporting human rights abuses. So very, very, very important.
Perhaps your comment on institutional investors and what else can be done.
Yes, so the investor role, like every other group, every one of us has to make this journey, and that's why I'm so pleased to be able to talk to this group, the climate governance group, because you're a group that plays a very important role in the company level, and investors have that important role to play as well, and it starts with us giving that message that I mentioned earlier. We all have to be on the same page. And especially now with the net zero commitments, so the institutional investors have a huge role. And from a company's perspective, they need to get a consistent message. So we need to get together as investors and make sure we're being consistent in what we say and how we say it, so that corporations are not getting different kind of messages from all the different shareholders. And then I think perhaps even from the viewpoint of Malaysian institutional investors, it's very encouraging to see representatives here, to see them. We know they're engaging very closely with the Asia Investor Group on climate change, because ultimately we have to work together. That's the first thing, is to build the alliances, because that gives you the powerful voice. So there's the voices you can be building internally. And then I think these international partnerships as well will be very important for your Malaysian institutional investors. So coming back, and I keep using the green steel plant purely as an example, because we're going to need to have these rolled out. We just announced last week an initiative in Brazil. We have an office in Brazil. We are working with a local development bank who are working with us to establish a new fund which can attract local capital, but also we can be bringing in international capital. But this is requiring us to work closely with institutional investors as an international player. And so we would love to do the same thing in Asia, because we think our next step must be to do something similar to what we're doing in South America, bring it here to Southeast Asia or Asia, and then be working with your institutional investors together. This is the only way we're going to solve these problems. And then that voice can be also much stronger in talking to governments about what is sensible policy. Because a big factor in all of this is the insidious role that fossil fuel companies continue to play. We should not underestimate how insidious these companies can be. And they have a lot of money to throw, and they can throw it at people and to try to keep the rules in their favor. And they're going to do that. It's just sad aspect of human nature. But if we can increase our voice, we can overcome that really poor behavior on the fossil fuel companies' part.
Any views from the Institutional Investors Council today? Or can I invite another question? Yes, please, sir. Oh, mic is coming away.
Hi, my name is Paul. Just have questions to Mark. You said that as sustainable investing, as sustainable investors, you like going to take the lead and go into sectors that is hard to go in and things like that. Do you think, or what's your view on the roles that is played by development DFIs, the development banks and also regulators or even institutional investors, have they taken the lead that makes it easier for you, private sustainable investors, to go in later on? You know, they take the lead first into these hard-to-do sectors. What's your view on the general overall global practice and in countries?
Yeah, well, this is something that I won't claim was easy, because when we said we want to raise $1 billion to do these hard-to-do things, we had to have a lot of discussions with the big institutions about how they're going to make money out of it. So we've been through this journey of having these discussions with the big investors. And when we were sitting around the table designing this, we said, we have to raise $1 billion. And the reason is that we did not want this to be a niche kind of $100 million impact fund. We wanted it to be something for the big institutional investor. And some of my colleagues said, that's ridiculous. You know, in many industries, the word new is a good one. But in the investment industry, the word new is a very bad one. Like, you're doing something new. Okay, where's your track record? Well, we don't have one. Because you've got a new team, everything was new. And so when we finished up raising $1.5 billion above our target, that was really a good result. And it comes down to these conversations with the institutional investors. Why did they decide to support this? And what I learned from those discussions was something really interesting. So we, as I mentioned, we have to demonstrate how we can get a commercial return. And so we looked at these sectors and say, for the green steel plant, we could say, look, this is why we think we can get 20% return, which is what the private equity investor expects. They all want 20% per annum. That's just like a standard thing that they want to have, because it is risky. So when we had these discussions with the big investors, we had to be clear to them that when we did our analysis, we were not going to make any forecasts about more regulation or about higher carbon prices. Because if we do that, we can come up with whatever number we want, depending on what we're going to say about the future. So we said, look, we've done the analysis and we're just going to assume there's no change. We call it, you know, the word business as usual. No change to carbon prices, no change to regulation. Even if there's no change, we think we can get 20%. So they would look at those numbers and say, okay, that's interesting. But then we have a discussion about your world view. What is your world view in 10 years' time? And what I discovered is that there were no investors I was talking to who had a world view that in 10 years' time, it would be business as usual. They were all saying that carbon pricing will be stronger, that regulation will be stronger. And if you have that view, you can look at our 20% numbers and say, oh, well, actually, I think it'll be more than 20%, because I think the world will be having a stronger case. And that's a very interesting way to think about it, because after they come to that conclusion, they then think, okay, well, if I believe that's going to be more regulation, what about all my other investments? They're going to be doing badly. So then the discussion moves away from just risk and return to diversification, because that's the essence of investment. And it's a good discussion to have. That old adage about not putting all your eggs in one basket, that's true today as it ever have been. So investors, the most sophisticated investors in the world, are now saying, we need to be allocating to these kind of climate investments, because they're going to do really well, and they're going to give us a different, you know, risk factor in those investments compared to what I have already. So that was the first thing, that we could get really big institutions supporting us from Europe. The second part of your question about DFI is also interesting, these development banks. We traditionally have not approached development banks to work with us. They have an important role to play in the ecosystem. Our role has simply been to make sure that the most sophisticated investors in the world understand why this should be good. But having said that, with the announcement we made last week about the work we're doing in Brazil, where we're setting up this platform, we did do it with a DFI there, who is coming in to help us, because they want to attract the capital into their country. So we thought, well, this is a good partner to have. And we would probably look to do something similar in Asia to try to get the momentum for us to be able to bring some of these things into Asia as well.
Thank you, Mark. Any other perhaps last question? If none, Mark, because the topic of a conversation is really on the investors' evolving expectations for increased climate action. If I can ask you to look at your crystal ball and see, of course, we're part of the perhaps baby boomer generation, with that purpose of building a different world. And what's your take on the younger generation, younger investors, that fraternity?
I am so impressed with the younger generation in every aspect. In fact, my partners and I sometimes joke about this. We're recruiting people into the company who are so talented. We say, goodness, if we were trying to get a job in our own company today, we wouldn't get one. These are amazingly passionate, talented people joining us. And we know that, I think when I speak to people across other industries, they know how important it is for their own company to be able to address these passions that the young generation rightly have about the world that they want to see. Now, there's a privileged group within the younger generation who might have inherited wealth. There's not a big number, but we, of course, deal with a lot of family offices as well. And we're seeing something similar in terms of the generation that's coming in, that they really want to be investing that money in a very different way to how that has happened in the past, which is all about what we're talking about today, creating a better world through the way we invest.
Thank you, Mark. Thank you for ending with that very positive note that the future is going to be equally engaging and purposeful. Thank you very much for sharing your experience with Climate Governance Council and also the audience here today at the Securities Commission. We look forward to a further conversation with you in another panel, but if you could all join me in thanking Mark Mills for this excellent contribution.
Thank you.